Hi, this is James Shugg in Westpac's London office with a look back at 2014 and what that delivered for the Australian dollar and a look ahead to likely developments in 2015. Well, the first half of the year was marked by relative stability in financial markets. After a wobbly start to the year, the Australian dollar rose from a low point of around 87 cents in January to 95 cents on the 1st of July. But in the second half of the year, of course, the Aussie's fallen approaching 14 cents to between 81 and 82 cents at the moment. As global economic uncertainty has increased, expectations about Reserve Bank interest rate policy have shifted back towards the possibility of rate cuts, and as commodity prices in particular have fallen sharply. Back to the first half of the year, we saw there some weather-driven influences which meant that the US economy contracted in the first quarter, but since then the US has done pretty well with business investment, retail spending and other employment in particular picking up quite sharply, although the housing market does remain somewhat subdued and inflation continues to run below what the Fed would be comfortable with. In Europe, the first half of the year saw economic growth continue with the recession of 2011 to 2013 giving way to modest growth late last year and in the first part of this year, boosted in fact by the weather in the first quarter. But since then, growth has struggled in the Eurozone, and in the second half of the year in particular, we've seen the ECB embark on further easing and heading into 2015, we're likely to see yet further measures from the ECB. The Japanese economy had a decent start to the year ahead of a tax increase, but has basically been back in recession in the second and third quarters. And that saw further easing in the form of extra quantitative easing, bond purchases by the Bank of Japan. And indeed, an early election was called, which saw the government retain its position. In China, the economy has struggled somewhat. It's still growing at a rapid pace, just over 7%. But within that growth story, there's problems emerging in the housing market in particular, and certainly consumer confidence, as measured by Westpac's new confidence indicator for the Chinese consumer. Confidence is running at the lowest it's been for approaching a decade. The Chinese policymakers have embarked on various easing measures, and more is likely to come in 2015. In Australia, the Reserve Bank has kept policy on hold right through the year to date. Earlier this year, our expectation that the Reserve Bank would cut rates again, we had that expectation, but we dropped that view in March, only to reinstate it more recently, earlier this month in fact, as the transition from the mining investment boom to economic growth being driven by more domestic driven sources. That transition has taken some time to come through. And with commodity prices falling sharply, and the Australian dollar not weakening as much as fair value estimates suggest it should, that's put more pressure on monetary policy to provide stimulus. And our expectation is that the Reserve Bank will cut rates in the first part of 2015. The Federal Reserve will normalise monetary policy, we expect, starting in the second half of 2015, and that'll be around the time that the European Central Bank should be well on its way through its quantitative easing program that Mario Draghi has been spending some years trying to put into place. The likelihood is that program will be announced in the first couple of months of 2015. The other point to mention, I suppose, is that we've seen an increase in market volatility related to risk aversion because of developments in Europe related to Russia and the Ukraine, in the Middle East related to the re-emergence of terror threats, and those factors are going to, in how they develop, are going continue to drive market sentiment, perhaps more than they did certainly in the first half of 2014. I'll conclude by making one point. I mean, the Europeans managed to fire off a rocket actually 10 years ago, which a decade later delivered 100 kilograms of high-tech equipment onto a meteor travelling at 135,000 kilometres an hour, some 500 million kilometres away from here. If the Europeans can achieve that, then the ability of Mario Draghi to deliver a quantitative easing program just against all the odds and against a lot of resistance internally in Europe, then the ability of him to achieve that, I think, is something that we shouldn't doubt. And if that is the case, then one of the key developments in 2015 is going to be a real divergence in policy, with the US looking to tighten interest rates, particularly starting around the second half of the year, at the same time as the ECB is easing policy, along with the Bank of Japan probably still on an easing bias as well. And that divergence in policy is going to be a key driver of currency markets in 2015. Our view is the Aussie dollar will tend to continue to weaken through the first half of next year in anticipation, in particular, of the Fed embarking on its policy tightening, and at the same time the Reserve Bank likely to be easing interest rates. But the Aussie might be on an improving or appreciating trajectory in the second half of the year once the global economic outlook clarifies somewhat, and we see an acceleration in growth coming through in China in particular, and that feeding through into more optimism about the Australian economy, and that in turn helping to deliver stronger Australian economic growth outcomes. So that's sort of the way things look from here. Of course, there will be developments that we just have no idea about yet that will have a material impact on currency markets. But for what it's worth, we're looking for the Aussie dollar to rise from 80 cents in the near term to back towards 87 cents by the end of next year. Okay, and I'll be back with regular weekly updates in the new year. All the best from Westpac in London to you and your families.